Hello traders, Gary Wagner here, roughly 12 noon in Honolulu, 6 o'clock in New York. It is Monday, 22nd day of March 2021, and this is the daily report for gold and silver. A fractional decline today in gold and a fairly strong decline in silver. Interesting action because what we saw is the return of high market sentiment, favorable market sentiment in some of the tech-heavy stocks in the NASDAQ. So I think we're seeing a rebalancing or a rotation out of the safe haven into equities. At the same time, any of the luster that Bitcoin kind of took away from gold is really absent in the market because it hit a high and it has been declining. What was interesting is we had dollar weakness, we had the treasuries come down slightly, and at the same time we saw the metals being pressured. We'll talk about that when we pull up our charts, and that will begin right now. Today we had a fractional decline in gold pricing with the most active April contract currently fixed down $3 on the day at $1,738.70. Of course, we are still long from about $1,722. We'll talk about that when we pull up our charts. GLD also had a decline of really a nominal amount, 24 cents per share, currently at 163. Pressure on the precious metals recently has been coming from the 10-year note as yields rise, as well as some dollar strength. That is not occurring today. Yields dip slightly on the Treasury notes, and as you can see, the dollar index is down by about 0.15%, currently fixed at 91.79. However, we can see the NASDAQ composite really taking off today, gaining 162 points. Definitely the index is outperforming the other ones. The tech-heavy index gained about 162 points at 13,377. This first chart that we are looking at is a daily chart of April gold. We can see that the lows that occurred in April through June of last year pretty much match up with this current low that we had when the market forces took the price of gold down to about 1675. We can see that it is definitely in a rally mode, but we have seen consolidation occur in the market over the last couple of trading days. And that really is most evident when we take a look at a Japanese average or Henkin Ashi chart. Henkin Ashi charts are excellent charts when defining strength of trend. We're looking at a Henkin Ashi chart beginning towards the end of February, the last part of the multi-month decline. And you can see that you've got a large body here with no upper wick. And as we go through this, what you'll see is that on the following candles, you had that same kind of a scenario in which we had no tails whatsoever. And what you want to do is wait for what we call the pivotal candle. And the pivotal candle will occur as the market gets slower. And as you can see, we just had a pivotal candle, and that candle is this particular candle that's very much a doji-like candle here, and that's signaling really the conclusion of the correction. Then you start to see these green candles, decent body size, no lower wicks, which is exactly what you look for. But as you will see, as this market began to trade, the candles for the most part stay green, but what happens is the body size isn't that large. And as we go to current action, the body size has even compressed more. So while we are still in a uptrend, there's no doubt about that, why we still have support down at the, call it below 1700 area, we can see that the market over the last 3 trading days has absolutely been consolidating. While we saw fractional declines in gold, the same cannot be said for silver, losing almost 50 cents, 25.83. That's the current fixed price of the May contract. It actually dipped to a low of about 25.50 early in trading this morning and then regained a lot of that as it opened in New York. although the technicals have been much stronger, and by that I am referring to current pricing in relation to the 50, 100, and 200 day moving averages, unlike gold, which have all of these moving averages above current pricing, we can definitely say that there is solid resistance at the 50-day moving average. That comes in at approximately 2639. We can see days where it attempted to break above that, but on a closing basis, we have not seen the market trade above the 50-day moving average since about the 2nd of March. Now, when we convert this into a Henkinashi, as we did with gold, we'll get a little bit more insight into the current trend. And what we can say is that we have a market that is absolutely choppy. It is defined by a series of alternating candles, predominantly green candles, but they all lack the qualities we look for in a strong move up, which is a long-bodied candle with no lower wick. We're getting the same with the red candles in that we have upper and lower wicks except for these 2 days here. It's odd that on a day when we had really aggressive moves to the upside in U.S. equities that we saw silver sell off so hard. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.